So if you have not read an article just about a week ago, the top 10% wealthiest of people actually own 89% of all stocks. Now, this is recent data that's taken during the pandemic, and what they found was even the top 1% that owns corporate bonds and equities, as well as mutual funds, they were able to amass $6.5 trillion in wealth during the pandemic, while the bottom 90% and everybody else was only able to amass 1.2 trillion. So during the pandemic, the wealthiest have gotten even more wealthier. And we already know that, but these are some actual data that we're able to back up that statement, because you can actually see just how much wealth was actually amassed. But now, what does that mean for you exactly? And always remember that success leaves clues. So what can you learn from this? So in this video, I just want to have a little chat about just some ways that you can learn from this particular instance and what's happening right now, how you can make it work for you and your family. So now, if you're new here, hi, I'm Joseph, and I've been investing since 2006, and I have over 15 years of business experience. So on this channel, I talk about money, talk about investing, how you can succeed whether you have a lot of money or maybe you don't have a lot of money. And one of the things that we can learn from this is this has been one of the fastest wealth creations that's happened in history. It's one of the fastest in the middle of a pandemic. The same is just like when there's a recession, how much wealth is created. Normally during bad times, people have a habit of thinking that things will be bad, when indeed there's just a huge amount of opportunity. One of the things that you have to understand is that, in particular with the stock market, since the pandemic and all the things that's been happening, the stock market is still up. Now, the media has a way of kind of always dictating, your emotions and kind of showing you things that, whatever they just want to show you. But one of the things that they do is they tend to highlight the days where the market has really been down. So you hear a lot more negativity than you hear about positivity, far as the market going up and down. But if you look at where the market was at the start of the pandemic and you look at where it is now, you can see that it's still pretty up there. And it's still going up even in a pandemic. And while everybody has been trying to time a crash and the market's going to retract and all these different things, it can indeed confuse people as to whether they should invest or not. And in the meantime, while they're stuck and they're confused, the market is still going up and people are still creating a lot of wealth. Now, as I stated in the beginning of the video, that success leaves clues. One of the things you have to understand, no matter what you do, if you're in real estate, you're buying land, developing, you own a business, you're a CEO, whatever it is you're doing, and you're making a whole lot of money, what the wealthiest do is they still put their money in places where it can make more money. So whatever funds and things they choose, those funds are typically just made of, a whole bunch of stocks and bonds. So no matter how you create your wealth, you have to do something with your money to give you the best return. And so right now, with the way interest rates are and the high yield savings accounts, they're pretty low right now because of the Federal Reserve rate. People have turned to putting more money into stocks and investing than they have necessarily put in, their savings account. Now, here's the other interesting thing about this particular data. One of the reasons why the wealth was able to generate so greatly is because, these people have a lot of money, but also they've been invested for years. They've been consistent in investing. So when a time like now happens and you have an influx of new investors and just more and more things changing and wealth trends happening within our economy, if you've already been invested in these particular areas or just being consistent within the funds, whatever you choose to do, or individual stocks, then you've seen your portfolio pretty much take a jump during this time. Just like after the pandemic, just like after the recession, where a lot of people were pulling their money out and people who were a little bit smarter were putting their money in. So now listen to what I just said. In the recession, as well as in a pandemic, you had a lot of people who were fearful, especially the recession, and they pulled their money out because they were like, well, we're going to lose money. Meanwhile, the wealthiest and those who, study or learn or just have the insight or whatever you want to call it, they decided to put more money in or continue to be consistent in investing. They're not jumping in and out of their investments. So when a time like this comes, and let's say back in 2008, 2015, 2000, people have been investing consistently and the market is just doing like this, and then you have certain sectors that are literally just exploding because of the usage now, then you're going to see your money jump up just like that. I'll give a prime example. Now, we just saw what happened with Tesla just this week and how Tesla just shot up, over $1,000 per share. In one of my portfolios, I hold Tesla, disclaimer, I hold Tesla in 2 different portfolios. And I've been investing in Tesla for some time. Ever since I took like my first test drive with Tesla, I've been invested in Tesla. But for me being invested in Tesla for years, split, years ago when it was like $100, $200 a share, what I've seen in one of my portfolios in particular is that it's up over 2,000%. And that's a huge run up when it concerns, my initial investment. Now, I have been investing, a lot since then, but in that particular portfolio, I made an investment. I was investing, consistently with Tesla at that time, kind of an older portfolio, and then I shifted to another portfolio. But that particular investment is up over 2,000%. Why? Because I was already invested. So what it simply means for you is to learn how to be consistent in your investing. No matter whatever it is, learn how to take your emotions out of investing. If you watch the channel, you're gonna talk about a lot. Take your emotions out of your investing and learn how to be consistent. The media, the news, people on YouTube, everywhere, you're gonna hear a lot of people with a lot of up and down views about what you should do, what you shouldn't do. But here's the best thing you should do. Find good companies, find good funds, whichever one you choose. Because I know some people say don't hold individual stocks, whatever. Whichever one you choose to do. Find some good ones and just invest consistently. Make it a part of your budget. And if you need to make some moves and things like that, just decrease how much you're investing. It's not that difficult. You don't have to necessarily stop altogether, unless it's just something you just need to do. But the consistency is what will help you to win in the long run. And we're only talking about investing, we're not talking about trading. So if you're on the fence right now and you're trying to figure out should you start investing or not because it's a pandemic and people are telling you don't do it or you should do this, just like with cryptocurrency, you hear people like, some months ago saying, I'm taking my money out of cryptocurrency. Then they tell you I'm putting my money in. All these different things that just can confuse people. Listen, just learn to be consistent. So if you're on the fence about investing, here's your video and your sign to start now. The reason being is because the only thing that's going to happen, whether we have a crash, pullback, or whatever, your consistency is going to win for you over time. And the more money that you get, the more returns you'll see. So it doesn't have to be hard, but this is just something that one of the lessons we can learn from seeing the recent data and everything that's been going on in the stock market and how much wealth was accumulated in the middle of a pandemic, because we're still technically in a pandemic. All right, guys, that's my little tip for today. Hope you guys enjoyed the video. Feel free to like and subscribe, and I'll talk to you guys on the next one. Love you. Peace.